Hello everyone. Last Friday in the aftermarket hours, Reliance Industries released their quarterly earnings. So in this video, before going to our regular pre-market stuff, quickly let's look at the Reliance Industries results in detail. First of all, overall they posted more of a good results, but there are some minor hiccups. Analysts expected the revenue to increase approximately 7%, but in response to that, the revenue increased 11%. However, EBITDA and profit comes as marginally below the expectation. Analysts expected the EBITDA margin of 18%, but Reliance got the EBITDA margin of 17.66%. So from that perspective, we can say it's mixed. However, compared to last quarter, it was way better since in the last quarter, Reliance results was disastrous. Year on year, their operating profit fell by 1%. But that didn't happen this quarter, rather it increased near 8%. So that's the first positive. Then the second positive, Reliance retail growth. Revenue increased over 19% and profit increased over 20%. They opened more offline stores. Overall transaction increased to 25%. So all around it had a phenomenal performance from Reliance retail side. Then the third minor positive is there, Reliance Jio's ARPU, average revenue per user. All the investors always loves this term ARPU. Again, it also increased marginally to 181.7 rupees compared to last quarter 180.5 rupees. Just for info, in Q1, Airtel ARPU was 200 rupees per user. Reliance ARPU is comparatively less than Airtel, but it was partially offsetted by their start of 5G services. So that's why I said minor positive. Other than that, Jio platform's revenue increased 11% compared to last year and EBITDA increased over 12%. And one more very important thing, the recent Reliance price sluggishness is caused by margin issue on the Reliance O2C business. Compared to last year quarter, O2C segment revenue in Q2 FY24 fell by 7.3%. However, the O2C operating profit in the period increased whooping 36%. They said it was improved by strong gasoline and PVC margin. Again, they haven't conveyed directly how much in terms of Singapore GRM, but margin looks improved massively. Overall, I'm inclined to more positive if you look into the individual segment business, but I'm little bit not comfortable that in consolidated net profit wise, it marginally less. Either way, I'm thinking there must be huge amount of short position in Reliance in the last 2-3 weeks expecting the bad results since in September they closed down their major refineries for maintenance purposes. Despite that, their profit in O2C business improved 36%. That's a very strong one. Anyway, let's see how market reacts to it. But before moving on to the next section, I like to highlight this one more thing since most of them don't talk about this. In the end of March 2023, Reliance got the debt of 3.13 lakh crore rupees. That now, in after 6 months, they reduced that to 2.95 lakh crore rupees. So, they repaid over 18,000 crore rupees of their debt. And they got the cash in hand of 1.78 lakh crore rupees, which is okay, and I'm expecting some short covering. Let's see. Again, this is my opinion. I can be wrong as well. So that's all about Reliance. Now let's look at what happened in US on last Friday. Before their market opening, Bureau of Economic Analysis released the PCE inflation for September month. So let's just discuss about core PCE inflation alone, since that is what Fed people are more interested in it. On year-on-year basis, it keeps on dropping. It dropped to 3.7% and on month-on-month basis, it marginally increased to 0.3%, but both of them was in line with the expectation. Thus, from PCE inflation point of view, it's positive. In line with that, all three major index opened positive. However, the Federal Reserve's overnight reverse repo facility funds have dropped from $2.5 trillion in December to $1.1 trillion now. That panicked the market, which pushed the stocks down. I know it's a little bit confusing, so I'll try to simplify this. Generally, not Fed but banks have some funds aside to lend money to the Federal Reserve in exchange for US Treasury securities as collateral with an agreement to repurchase them the next day. So, government can use that money for emergency purpose. Now, a significant decline in the use of the Federal Reserve's overnight reverse repo facility is an indication of changes in the financial system's liquidity conditions. Simply, government can borrow less in the emergency situation. Anyway, that along with the poor earnings of oil companies made the Dow Jones and S&P 500 to erase all its gains and closed negative. However, on Thursday, Amazon posted an amazing earnings results. Because of that, it increased over 6%, and some support from Apple and Microsoft made the Nasdaq to close positive. In the end, Dow Jones decreased by 1.12%, S&P 500 down by 0.48%. However, Nasdaq increased by 0.38%. Regarding VIX, it increased from 20.7 to 21.3. However, at present, the future market is trading approximately 0.5% positive. In case of oil, on Friday it increased to 2%, but now it decreased 1 to 1.5%. But not sure about the reason. At the time of this video, WTI crude is trading at 84.5 US dollars per barrel and Brent crude oil is trading at 88 US dollars per barrel. Regarding Indian ADR, both Infosys and Wipro closed positive but less positive than Indian market. In case of banks, both of them closed negative. HDFC Bank was down by around 1%, whereas ICICI Bank was more of a flat. If we see just plain, it looks like IT sector is positive and banks negative, but that was not the real story. I compared the historical 1 month 5 days chart. So from that, IT sector indicating flat to negative, whereas banks indicating flat to positive. So that's the takeaway for today from ADR. IT flat to negative, banks flat to positive. Other than all this week coming Wednesday, US Fed interest rate decision meeting. At present, the expectation is to pause the interest rate decision. But what market keenly wants is the information about when they will start the rate cut cycle. Then on coming Thursday, Apple's earnings results, Bank of England's interest rate decision, and Eurozone inflation and GDP data is due. Here, the Eurozone GDP data is more important for the oil price, since if it's contracted more, then that will affect the oil price significantly. So these are the items that can influence the market this week. Then for India specific, this week corporate earnings will be the biggest market determinant, since over 700 companies like SBI, L&T, Tata Motors, Bharti Airtel, Tata Steel, Sun Pharma, Hero MotoCorp, Titan and Adani Enterprise, etc. all set to release their earnings. So that also will influence the market. Second, regarding weekend quarterly results release, Union Bank of India, SBI Card and Bharat Petroleum posted a very good results. Especially Bharat Petroleum, they posted a standalone profit of 8,500 crore rupees against a loss of 300 crore rupees in the same period a year ago. Finally, on Friday, despite our market closed overwhelmingly positive, FII net sold for 1,500 crore rupees and DII net bought for only 310 crore rupees. So the actual net institution was net sold for 1,200 crore rupees approximately. Then I'm not sure how Indian market closed positive. As a summary, on last Friday night, US market closed more on the negative side. However, PC inflation was dropping. US market just reacted to the Federal Reserve's overnight reverse repo facility funds, and it's not that much big of the issue. Then on Saturday morning, in response to the US market, GIFT Nifty was down near 100 points and closed at 19,028. However, now US future market is trading positive, so that might trim some of the losses and possibly our Nifty might open around 19,000. In addition, if Reliance and banks becomes positive, then possibly we might have a positive trade today. Let's see. However, always keep an eye out for any escalation in the Middle East, since that can change the momentum anytime. Then, as per stock open interest, Mahanagar Gas, Navin Fluorine International and Indian Hotels got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, it's Delta Corp, India Mart, Intermesh, MCX India and Torrent Pharma got an increase in open interest with a positive price close, indicating long build-up. Then about the things to look out. Today, UPL, DLF, TVS Motor, Adani Green, Marico, Apollo Tubes, Blue Star, Castrol India, and KPIT are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, during our market hours at 2:30 p.m., Germany's GDP data is due, and in the night, Europe's inflation expectation and Europe's consumer confidence data is scheduled to release. Coming to technical, Nifty opened gap up on Friday and continued to inch higher throughout the day. Thus, it closed positive of over 190 points. Basically, after relentless selling from Monday to Thursday, Nifty temporarily paused its decline due to an oversold chart setup. However, it closed significantly below the critical breakdown level of 19,250. So possibly we can expect this pullback to continue till 19,160 to 19,220, where also the resistance is present in the form of Fibonacci retracement level and the 40-hour moving average. And also the hourly momentum indicator has a positive crossover, which is a buy signal. Thus, considering all the above parameters, I expect the pullback to continue till 19,250. But in the short term perspective, as long as it stayed below 19,250, it inclined towards selling or trend towards downward movements. Then on the weekly chart, Nifty did took the support zone 18,800 to 18,925, which we discussed last week, where multiple support parameters in the form of 40-week average and crucial Fibonacci retracement level was placed. Thus, in the short term going forward, we can expect a consolidation within the range 18,800 to 19,200 before resuming next leg of the fall. But for today, in terms of levels, 19,160 to 19,220 shall act as the resistance, while 18,930 to 18,900 shall act as an immediate support zone. Then in case of Bank Nifty, in the short span of time, it corrected over 2000 points, so it appears somewhat oversold, and again thus on Friday it also witnessed the pullback. So we can expect the pullback to continue till 43,400, where the resistance in the form of hourly upper Bollinger Band. On the downside, 42,730 to 42,600 is the crucial support zone. On the options front, the maximum call option open interest for Nifty is at 19,200 strike, then followed by 19,500. Then in terms of new call rating at the maximum is same 19,200 followed by 19,500. All this suggests that 19,200 is the strong resistance. On the other side, the maximum put option open interest is at 19,000 followed by 18,800 then 18,900. Here 19,000 is the short straddle and the maximum new put options were wrote on again 19,000 and 18,800. So we can expect 18,800 to 18,900 as the strong support zone. Similarly, for Bank Nifty, the support zone is between 42,000 and 42,300. On the flip side, the critical resistance is at 43,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.